Good morning, folks, and welcome to a really quick morning update. It is the 20th of December, and we have the markets under some pressure. So we're going to go over the futures action. I'm going to talk a little bit about strategy. It feels like we were just here. We did Sunday Night Futures Live last night, and I said I'm worried about this market, that I am in the largest cash position of the year right now. Am I going to go crazy buying stocks today on this pullback? Probably not. Will I nibble? Probably. But aggressively long? No. As I mentioned last night, I'm going away, and I sold last week until I could sleep. I do have a couple of positions on I am worried about. One of them is NVIDIA. I'll go to that chart in a moment. It is down in the pre-market. So I'll entertain if I'm going to take that trade off today and go to cash with that risk. Before we go forward, I've been promising to put out an explainer video on what a strangle is. I talk about it often. It's a cash flow option strategy. I finally finished it up last night. So if you watch this on YouTube, use the link below, or if you watch this on the blog, use the link below, and there's a video there. It'll walk you through what is a strangle, how we use it, when we use it. I have an example. It'll show you the Slack channel. Everything is there that you need. It's a very high-level video, not a lot of detail, so take a look at it and enjoy. I promised in that video to send out a slide deck. If you want the slide deck, I don't have the link set up yet, so check back later. I just got this done literally late last night, so I haven't had a chance to set up the autoresponder to get the slide deck out for those who want it. And the slide deck is the one I use in the video. All right, let's get to the markets. All right, so what we're looking at this morning is the S&P 500. Now, initially we were up last night when the markets opened up. We were live. They opened up. And then I said, you know what, let's put some alerts up here. Should we begin to pull back? And like 4 or 5 alerts fired off last night, multiple alerts that the E-minis, the Russell 2000, the Dow, they were all pulling back, putting in lower lows and lower highs. So that's a problem. So we wake up this morning, E-minis are down over 1 1/3%. They were lower. We have bounced. Well, you can see what we're doing here. This is an hourly chart, so quite volatile. What we're doing is we're trying to hold a recaptured support level. Will we hold it? I don't know. Pardon me, my voice is going. I don't know. We're not that smart. The markets are going to tell us, this is a 4-hour chart now, the markets are going to tell us which way they're going to take this market. Now, what we're going to talk a little bit about here is strategy. What's my thought process? What are we going to be doing? Well, first off, we're not going to panic. We know the whys behind why what's happening today is happening. And the why is that, to his credit, Senator Joe Manchin said, no, I'm not spending more on your commie Pinko bill. It's not going to happen. I'm going to break with the party, and I'm not going to sign off on it. Now, they're going to hammer this guy. They are going to demonize this guy. If you're over in West Virginia, get on the phone with your senator, congratulate him for doing the right thing. One of the few politicians out there, whether they be Democrat, Republican, that did the right thing, even though it's helping to tank the market right now. But let's face it, the stage has been set. We have a very overvalued market. I went over the valuations last night. Incredibly overvalued. Joe Manchin had zero to do with that. Let's move on. The Russell 2000 is about the same as last night, down 1.79, 1.8%. We are off the lows of the session. This is where we went live last night. So what we may get here is a turnaround Tuesday. So I have zero intention of going in and panicking and selling. What we will be doing is looking for a counter trend rally, ideally today, to lighten up on more longs. And if we don't get that counter trend rally, we'll be looking for a turnaround Tuesday. It happens more often than not. Remember where we're trading now. We're trading in a seasonally favorable period of time. This is the time of year we generally get a Santa Claus rally. Each day that goes by, the probability of that rally gets lower and lower. I have to admit that. And the one thing that is for sure, from this point forward, you're going to see volume, whether it be the upside or the downside, go like this. It's going to trend down into the new year. After the new year, Lord knows what's going to happen to this market. So that's why we want a lot of cash. We want to be able to be nimble and take advantage of opportunities and not be a victim of the market. Now, as for the Nasdaq this morning, it's down 1.5%. We have broken support here in green at 15,600 on the Nasdaq 100. The Dow down 1.15%. Note how we bounced off of support. That's holding. Let's take a look at the US dollar, which was very strong last night. It remains strong. We're off the highs, though. We're looking for a potential continuation breakout. Why might the dollar break out? Well, you actually saw fiscal discipline by Joe Manchin. Is there hope that the republic can be saved? Here is your bull flag setup. The weekly chart was very strong. So the probability of the dollar moving up higher is very good, which does not bode well for gold. Gold is now down $7 the ounce. We have given up the 1800 mark, and we are doing battle with a support level, which at current on this 4-hour bar, which closes at 9 a.m. this morning, is breaking support. Silver is well off of its lows, and we may have seen a bottom here on silver, despite the U.S. dollar. It's good to see that we are rallying back here some in the face of a strong U.S. dollar. Now, I mentioned the video earlier, and we have and now I can finally say this, we have a strangle trade on this. Now, I don't have to go into my description of what a strangle is. There is a explainer video below. Please go down to the explainer video at your leisure and take a look at my video on what a strangle is. So we have a strangle here. Our strike to the put side is down at 260 right here. Way too close for comfort for me. Way too close. And we have the 330 call side right here. Now, I'm tempted to roll this down, book profits on this call side, roll this down, maybe to 310, 315. But what if we get a big counter trend rally? I got to check out the probabilities. Let's check out the probabilities. This is not updated, I don't think, for the price action as of yet. We can go by Friday's close. So we are up. Our options expire on the 31st. We have the 330 strike, and the probability of trading in the money is less than 5%. I love the odds there. I hate to give that up because it's like free money almost. But I may have to move that down if I decide I want to do battle with the 260 support level and possibly roll the trade out. Maybe roll it down to 315. Which is at about a 10% probability of trading in the money. So I'll be deciding that members expect some sort of a commentary in the Slack channel at some point in time later today. We'll see what the price action is. Again, we've broken down through support level. We've gapped down about $9, $10, and our strike is down here. So a little bit too close for comfort for me. Again, members more to come. Folks, remember, this is in a very expensive market. If you're heavy right now, remember that margin debt is just off of record highs, making the dot-com crisis look like a walk in the park when it comes down to margin debt. Once this chart gets going in the wrong direction, meaning putting in lower highs and lower lows, this market is in a ton of trouble. So stay small, And don't let your ego take advantage of you. Don't become a slave to it. If you have a loss, keep it small, exit, get out, raise capital. And with that, everybody have a happy holiday. If I don't speak with you, members, I'll talk to you soon. And everybody have a profitable trading day. Be well.